a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about NVIDIA, its results, and some ETFs that investors could look at. So let me share my screen. We'll talk about NVIDIA's results, our key takeaways. We'll not spend a lot of time on that because I'm sure you all have watched the results. Then we'll talk about the stock split and what it means for investors. The biggest question then is whether NVIDIA's AI chip dominance can continue. And then we'll talk about some ETFs and we'll talk about the stock and its valuation too. So, about the results. The company reported exceptional fiscal first quarter results, surpassing sky-high expectations. Revenues were more than $26 billion, up 262% year over year. And the data center revenues, where all the AI magic happens, and they are much watched, they surged 427% year over year. Now, Alphabet's Google, Microsoft, and Amazon, they accounted for about 45% of data center revenue. So these are all deep-pocketed clients who are willing to pay a lot for NVIDIA's chips. What investors loved was Jensen Huang's comment, CEO Jensen's comment, that he said that we will see a lot of Blackwell revenue this year. So this is their new chip. Their latest Blackwell B200 GPU is up to 30 times faster than its predecessor. He also announced that after Blackwell, there's another chip and they'll be launching new chips on an annual cycle. So every year there will be a new, much more efficient chip launched by NVIDIA. And he called that this is the beginning of a new industrial revolution where NVIDIA was turning about $1 trillion of data centers into AI factories, artificial intelligence factories, where data comes in and intelligence comes out. Very interesting. So now let's talk about this 10-for-1 split that they announced. Stocks will start trading on split-adjusted basis on Monday. This doesn't make any change in the company value or the value of your holdings. So you'll just get 9 more shares for what you hold, and the value of those shares will remain the same. But lower share price can increase the trading volume. It can make it, the lower price can make it more appealing to smaller investors. Retail traders do have, many retail traders have access to fractional trading, but not all have access to fractional trading by platforms. Optional traders also love smaller sizes because they trade in lots of 100, and many bigger investors also prefer trading in round lots of 100. So this could increase liquidity for shares, but the biggest outcome could be that share could be included, the stock could be included in the Dow index, and the Dow is weighted by price. So that is why the committee that they do not include very high price shares because that could skew the daily return of the index. And when after split adjustment, this stock could be included, it would be become a very attractive candidate for inclusion in the Dow index. So that way the shares could benefit. Now, as I said, the biggest question is whether the AI chip dominance can continue going forward. So NVIDIA currently controls over 80% of the market for cutting-edge chips, which are used to train and run LLMs. And big tech companies, as well as AI startups, have been scrambling to buy these chips. And thus that has led to a shortage of chips, which the company expects to continue. this year and next year as well. And the stock is, as we are recording, the stock is up more than 5% because it was announced that Elon Musk's artificial intelligence startup XAI has raised $6 billion in its latest funding round, and most of that would go to buy NVIDIA's chips. And NVIDIA's GPUs are unmatched for training these AI models. But one risk is that after training, you require inference work from those models. And for inference, some chips from other companies like AMD and Intel can be used after the models are trained. But currently, NVIDIA has a dominant position in the inference market too. And in fact, CEO Jensen said that the inference also needs cutting edge chips now because inference has also changed. Then a large technology company, these tech giants that we talked about earlier, they are designing their own chips, but they will continue to use NVIDIA's chips also going forward, but their own in-house chips could reduce some dependence on NVIDIA. But then AMD is a distant second in the market currently, but AMD is also trying to catch up. What sets NVIDIA apart from competition is that they have created a whole ecosystem geared to AI. So they provide not only hardware, but also their CUDA software and networking technologies. So in fact, Jensen has said many times, it is not a chip company, it is a platform company which provides advanced full stack accelerated computing. And then NVIDIA has access to a lot of capacity at TSMC, Taiwan Semiconductor Company, because all these cutting-edge chips, they are designed by NVIDIA or other tech giants, but they are all manufactured at Taiwan Semi. NVIDIA already had access to that capacity. Others will find it difficult to increase their access to that capacity at TSMC. So that is the reason why their chip dominance is expected to continue going forward too. And there are other growth areas apart from AI, including automotive, drug discovery, omniverse, sovereign AI, etc. Now let's talk about the stock. The shares are up over 120% this year. And this comes after about 240% jump in 2023. But valuation is still reasonable, not overstretched, because earnings continue to grow faster than its share price. In fact, the stock is currently trading below its 5-year median and those of many other chip stocks, including AMD on forward earnings basis. If you do not own the stock, don't worry, you already probably have a lot of exposure to NVIDIA in your S&P 500 and NASDAQ 100 funds, which almost all investors hold in their core portfolios. As far as analyst ratings are concerned, analysts remain very bullish on the stock. And the stock currently has 56 buy or overweight ratings by analysts and 6 hold ratings, no sell rating or underweight rating by any analyst. If you like the stock, you do not hold it. If you want to increase your exposure, maybe dollar cost averaging makes some sense. But AI boom will lead to lifting of many boats. So investors could look at ETFs that have been doing well. Now, because of this meteoric surge in NVIDIA shares, many investors have piled into single stock ETFs, NVIDIA's single stock ETFs that aim to double its daily return. So NVDL has about 2.4 billion in assets, and NVDX has 411 million in assets. Investors should use these leveraged ETFs with a lot of caution. They are not meant for buy and hold investing, and they should be used only by those who closely monitor their portfolios, but they can be used effectively as short-term tactical trading tools before or after earnings, or before or after any important event, or if there is a significant drawdown in the stock, but only by investors who monitor their portfolios carefully. For most other investors, semiconductor ETFs that we have talked about a lot, like SOXX, SMH, XSD, they make a lot of sense. There are AI ETFs also that are worth a look, like RoboBots, IRBO, AIQ, and we have covered these ETFs also in our earlier videos. Thanks for watching. In full disclosure, I do own NVIDIA shares in my personal portfolio, and I also own semiconductor ETFs, SOXX and XSD, also AI ETF, IRBO, in the ETF investor portfolio that I manage. Thanks again for watching. Make sure to subscribe to our YouTube video channel so that you do not miss anything, and I will see you next week.